Hi, everybody. This is Gary Dean, and this is our video report for Wednesday, September 21st, 2016. So the Fed came out, did exactly what they've been doing for the last 3 years, pretty much read just a stamped version of what they say every time, and the markets have reacted pretty much the same way they always have, and that is trying to be surprised at a surprise birthday party, knowing that it's been there for the last 3 years. What my point is on that, everybody knew they weren't doing anything. There was a couple question marks here and there, but when you have 90% of the people that are looking at the Fed's funds rate and not expecting a hike, I don't care what Yellen will sit there and try to lie to everybody about. It's data dependent. It's not. It's just they're not going to raise rates when everybody is not expecting it. Period. The whole part about them not being political, I don't know how she can actually say that with a straight face, because they were supposed to be raising 4 times this year, and some of the people that I read that follow the interest rates pretty well and the Fed and stuff, and there was a handful of them, all said she wasn't going to raise once this year. And the fact that they were right, just because their main reason was she's not going to raise rates in an election year, proves that yes, they are political. As much as she wants to try to make everybody believe that they're not, they are. So anyway, the surprise was, okay, well, no rate hikes. I guess we have another month to run. Now, my take on this is I wanted to stay neutral. This entire time, it was a neutral bias, because we could have been down or up. So I said, let it make the break, and then from there, let the dust settle. Now, if it would have been to the downside, I was recommending that once it broke support, take a short position, and then from there just place your stop at the previous high. If it's up, then you wait for resistance, and from there we want to start seeing some sell signals. Now, we don't have them right now, so even if we get a little bit of a pullback, say down to the 2153, about 10 points from where we were, and it holds, most likely it's going to come back up, and they're going to either test the right at this level here, which is the 2168, or they're going to come up and close this gap at the 2178 level. That will give us bearish divergences. So that is, that's really been the call. They made it up to the 62% retracement level, which is typical for a for a counter trend move. But the thing is, I don't think this is over, and it's mainly because this move was pretty strong, and you really very rarely. Well, I mean, we had it here where we had a strong move, and then it came all back and gave it all back. But in any case, I like to see sell signals, something to the where if it would have been a divergence from here, then I would have been a little more anxious. But we're still, I would now start to allow for a pullback. But my goal would be if they can stretch this up to the 2170, 2179, that's where I would start getting aggressive on the short side again. So if we look at the hourly chart, we finally got the technicals above the zero line. So I mean, they've had to work hard to get this here, and this all was one day, and from here they've been struggling to get up to this this gap up high of the 2162, which they just got on it here. So most likely we're going to start seeing some bearish divergences, and remember, we have this resistance at the 2167. So if the bulls can push it through that, that's when I'm anticipating that, okay, they're going to make a run to close this gap right here, and that's when you want to be looking to take a short position, and you just put your stop at the 2193. So you can kind of see where the bulls are backing themselves into this corner, because I don't think there was a lot of people shorting this market going into the Fed meeting. I think a lot of shorts took their profits on either this drop here or this drop here, and have been kind of day trading. And now when they did their, we're surprised that you guys are giving us a surprise birthday party Fed announcement like they've done every time, now you're going to get your shorts that are going to start layering in. And once it gets up to this level, I think you're going to start seeing people getting really aggressive on the short side because that's going to be right around that 21.78, and the only thing you're going to do is put a stop at the 21.94. So they're not risking a whole lot. Now the bulls, they, depending if they're jumping on here and they're going to, they're trying to run it and get into the bullish end of things, and it's up at the 21.80, they're risking that the next move is coming all the way back down to this 21.17. So it's my take is I think the Bears are still in control, even though with this move right here, like I said, I've kept a neutral bias just because going into a Fed's announcement, it makes no sense taking a direction, just like this made no sense with the actual announcement that everybody knew. But this is what they do. There could have been up 23 or down 23, and it's a flip of a coin, and that's really what things have come to with this. But now we have the move. We're out of this little range. Now we wait for the next setup, and we take a more educated, look at which direction or where it may head lower or where the move up may stop, and then just quickly put your stop right in place. And if it breaks above it, then something else is going on, and we may have, this may have just been the only panic low, and we're going to try to grind higher into the end of the month, or maybe into for the next couple months into after the elections. But right now, it's at the thing where my short curiosity is peaked, but it's not there. I very rarely make any trades after a Fed announcement. Like I said, the perfect thing was we come up someplace up into this area here, the 21.78, fail, and then come down and take out these lows. So give it another day. I wouldn't be too anxious to be jumping on either side. I'd really be cautious on the long side, but you want to be cautious on the short side too, because they have this gap that I've been saying has a 99.9% chance of getting filled, because every downside gap has gotten filled before we've had a move down. So let's see what plays out tomorrow. Have a great night, and talk to you guys in the morning.